Good evening. In the last class, I told you about this cost price method in consignment accounts. Now I am going for invoice price method. In order to keep the profit amount secret even to the consignee, the consignor, what he will do is he will fix a selling price and he will inform the same thing to the consignee that you have to sell the goods at this price only. If they are sold, okay, well and good. Otherwise, return the goods to me. Like that, he will inform the consignee about the invoice price. So, invoice price or selling price. Invoice price or selling price, it will have its effect on four items. What are the four items that the invoice price will have its effect? That is, effect in the sense we have to take at invoice price only, and we have to consider the other things as usual. First one is opening stock with the consignee. We have to take at invoice price only. Then goods sent on consignment at invoice price. That thing also we have to take at invoice price only. Okay. And another thing is goods returned on consignment. That thing also we have to take at invoice price. And the last one is closing stock or consignment stock. We have to take at invoice price. So when we take at invoice price, what we have to do? How can we come to know about the profit amount? Invoice price minus load amount. That is, load is nothing but the difference between the cost price and invoice price. We'll call that thing as load. So this load amount we have to deduct from the invoice price in these four important aspects. That is, opening stock on consignment, goods sent on consignment, next goods returned on consignment, and closing stock on consignment. Closing stock or consignment stock, whatever it may be. Okay, that thing you have to take into account. And when we are going for consignment, okay, closing stock valuation is very, very important. Closing stock valuation. So what is this closing stock? Okay, closing stock will be in units only, but we have to value the closing stock. When you go for first semester, okay, there also you have to find out the value of closing stock, because unsold stock or closing stock will be in units only. We have to take the value of the closing stock or unsold stock. We have to take into account the value of unsold stock. How to derive the value of closing stock? Closing stock is valued either at cost price or market price, whichever is less. This is common everywhere. This is common everywhere. Mind it. Okay, closing stock value will come to know, and we have to calculate either at cost price or market price, whichever is less. Two times I'm repeating this. Okay. In the same way, we have to find out, okay, what is the total goods consigned minus goods sold. Goods sold, how many goods were sold? So the remaining items, the remaining units, whatever it may be, okay, the remaining units, take that as units only. No, don't take that as items. Okay, the remaining units are nothing but unsold units, or it is nothing but closing stock. So when we are going for valuation of closing stock, okay, first what we have to do is we have to take into account what is the value of goods sent to bank, goods sent to consignee. Then proportionate expenses of non-recurring expenses of consignor and proportionate share of non-recurring expenses of consignee. These two things we have to take into account. So what is this non-recurring expenses? Non-recurring expenses are nothing but direct expenses. That is, they will appear only one time. they won't repeat again and again. Okay, for example, freight, loading charges, cartage, coolie. Okay, all these things are nothing but direct expenses. And these expenses will be incurred either by consignor or by consignee. So, non-recurring expenses only, that is direct expenses, or expenses which will appear only one time, those things only we have to take into account. Recurring expenses, there is no necessity for us to consider, there is no necessity for us to take recurring expenses. Recurring expenses means again and again they will repeat. So we can call them as indirect expenses. So all indirect expenses or recurring expenses or repeated expenses, whatever it may be, we have to leave. Okay, there is no necessity for us to take those things. Only proportionate share of non-recurring expenses of consignor and proportionate share of non-recurring expenses of consignee only we have to take into account. So, what is the cost of goods sent on consignment plus proportionate share of non-recurring expenses of consignor, proportionate share of non-recurring expenses of consignee, we have to add, and we will come across the total cost. Total cost by, okay, goods sent on consignment into units of closing stock or unsold stock. So thereby you are going to get the value of closing stock, and that value only we have to show in the consignment accounts. Don't forget that. Total cost by total number of units sent into unsold stock or closing stock. So that thing will give you the value of closing stock, and that value only we have to consider that in consignment accounts. Okay, so this is about the consignment, valuation of consignment stock. And one more thing is very important thing, that is normal loss and abnormal loss. We will come across normal loss as well as abnormal loss, and abnormal gain also we will come across sometimes. Okay, suppose take for example, I'm just giving a small example. Through that example you can able to assess, or you can able to understand about what is normal loss, what is abnormal loss. Suppose you are sending petrol, 1000 liters of petrol to Vijayawada. Okay, and when you are sending, okay, you will send by tanker along with a driver, and when the petrol reaches the destination, that is Vijayawada, you will come across 950 liters 950 liters of petrol only on delivery, that is on reaching the destination. So there is a difference of 50 liters, and this 50 liters will be the normal loss, because during transit some petrol, it may be evaporated. Okay, it may be evaporated, even though you fix tight, airtight packing, even then also some loss you will come across. That loss, we will call that thing as normal loss, and there is no necessity to value the normal loss. We can adjust that in the goods sent on consignment. That is most essential that you will come across. And abnormal loss, okay, abnormal loss will occur either by theft or by fire accident. If there is a fire accident, complete stock will go away. So it means that by theft. Suppose this abnormal loss, we can say that abnormal loss is unavoidable loss. Normal loss is avoidable loss. So if you come across abnormal loss, okay, you have to value that, and you have to take into account that thing. So abnormal loss, how you will value that? Okay, the formula to calculate abnormal loss, wherever it may be, normal cost of normal output by normal output into abnormal units. Suppose take for example the previous example. You are sending 1000 liters of petrol from Hyderabad to Vijayawada. Say for example 30 liters of petrol was evaporated. That is normal loss. But when you reach the destination, if you come across 880 liters, 880 liters, whatever it may be the difference. So 1000 minus 30, 970. That is, it reaches the destination. When it reaches the destination, the petrol must be 970 liters. But it is 900 liters. Say for example 900 liters. Don't take 880, 900 liters. So 70 liters. So 70 liters of petrol it was not there. So that 70 liters we have to consider that as abnormal loss. Abnormal loss. The same thing you will come across when you go for cost accounting. When you are going for process costing, you will come across normal loss and abnormal loss. Sometimes you will come across abnormal gain also. If your fate is good, if your fate is good, or if the consigners, okay, fate is good, okay, ye may come across abnormal gain. So whatever it may be, whether it is abnormal loss or abnormal gain, okay, the same formula you have to use. That is, value of abnormal loss or value of abnormal gain is equal to normal cost of normal output by normal output into abnormal loss in units or abnormal gain in units. This is very, very important, and people they have to note this. Okay, it is important. Normal loss and abnormal loss. Now, you may have a doubt, sir. You are telling that invoice price, and in 4 items we have to take at invoice price. How to convert? Okay, invoice price will be in the way that cost plus 25%, cost plus 20%, like that only it will be. And above cost, sometimes above cost some percentage they will give. So that additional percentage we have to consider that as load. We have to calculate the load. Now how to calculate? First of all, you have to calculate the invoice price. Okay, when he gives in percentage, you have to take that. To let the total cost be 100 plus load, whatever it may be, 25%. So you will come across 125% invoice price. Then you have to go for a simultaneous equation. If 125 rupees is invoice price, then load is 25. If some amount is invoice price, then what is the load? You will come across the load amount, and this load amount you have to deduct. Okay, sir, when we are going for consignment accounts, okay, opening stock will appear on the debit side, goods sent on consignment will appear on the debit side. So credit side also you have to write by stock reserve, load on opening stock. Similarly, buy goods sent on consignment, load. Like that on credit side you have to write. Suppose when we go for goods returned on consignment, okay, the load amount you have to write that goods returned on consignment, it will appear on the credit side. Similarly, consignment stock will appear on the credit side of consignment account. So the load amounts on those two items, you have to write that on the debit side. You have to write that on the debit side. 2. Goods returned on consignment, load amount. Similarly, 2. Stock reserve account, load on closing stock. When you do like that, automatically you are going to get the profit amount. That is, you can be in a position to calculate the profit or loss amount on cost price. Automatically you will derive the cost price. And the whole thing, it will be done by the consignor. It will be done by the consignor. Consignee has no responsibility in doing this. Only the consignor has the responsibility in calculating in deriving the cost price and thereby calculating the profit amount or loss amount. It is the duty of the consignor only. One to two times I'm repeating that. It is the duty of the consignor only to convert the invoice price into cost price and find out the profit amount or loss amount, okay, on consignment. This is about consignment accounts. And the best example, as I told you earlier, that the best example for consignment accounts is nothing but courier services. Okay, courier services, they will do on consignment basis. That is, the head office will be at one place and it will have so many branches, so many franchises in different places of the same city or in different cities. Whatever it may be, the goods that you want to send, okay, you have to go to the courier office and they will give a triplet copy. One copy will be given to the person and one copy they will keep for their office purpose and one copy will be attested to the letters or parcels, whatever it may be. Okay, so like this you will come across triplets. Okay, and the whole business which will be done on consignment basis. If you go through the receipt, if you go through the receipt, there you will come across on consignment. Okay, who is the person to whom you are sending? That is consignee. The person will be the consignee whom you are sending. To whom you are sending, that person will be the consignee and you will be the consignor. So you have to sign on that. Okay, you have to sign on that. And if you have to write your address also, mind it, you have to write your address, because when the parcel was not reached to the concerned person, again it will come back to you. Again it will come back to you. That's why you have to write your address. So consignment business, it will be done by the courier services. So this is how you will come across consignment accounts. Okay, sir, you are telling, I am telling each step by step, please. And when you are doing this consignment accounts, mind that first of all you have to go for working notes, unless otherwise you won't keep the working notes. We, the examiner, he won't value first. And another thing is, you have to find out for every problem, you have to find out whether it is small or big, whatever it may be, whether you are interested or not interested, but you have to prepare the account sales first. Then only you have to think whether we have to pass journal entries or whether we have to go for the ledger accounts. When you are preparing ledger accounts, that too I am telling you, okay, you have to see whether the problem is in cost price method or invoice price method. When it is in invoice price method, again you have to find out the load amounts for the four items. That is opening stock on consignment, goods sent on consignment, goods returned on consignment, and closing stock on consignment. These for these four things you have to calculate load amounts, then only you have to proceed further. If you like this, okay, please subscribe to my channel and I will be very thankful to you if you subscribe this channel. Thank you.